Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. Today is the first trading day of June in 2025, June 2nd. And we're going to be here for just going to be me. I'm going to be with you guys for about the next, I'd say 10-15 minutes. We're going to keep this session really short. There's just a couple of things in the market that I want to bring up to your attention. And we'll take any questions from anybody that is here with us live. Most of you will be watching this on a replay later on, so let me know if you have any questions later on. You can email us at support@12Minute Trading and let us know what you want to see on next week's session, or we can just answer your question directly to that. So, looking here, I'm going to go over to the S&P 500, which is where we spend most of our time because it's the most important index. It is not the Dow. Nobody really cares that much about the Dow. The Dow is fairly thin with only 30 companies, but with 500 companies and some of the biggest ones, and of course the biggest tech, the S&P 500 is the one that really matters right now. And if I look at this from a fractal perspective, which means multiple time frames, I'm going to be looking at this on the monthly chart over here, weekly chart here, daily chart on the right-hand side. And what do we have? We have a monthly uptrend with higher highs and higher lows all the way along here. Now, we had our little tariff tantrum back over here in the months of, March and April. And May was one of the strongest months that we've had in a long, long time, which is pretty typical coming off of a bottom like that we did. Okay, so we have still a higher low here. Now, to complete the uptrend, we need to see a higher high. So we need to get the price above 61.47 to complete that. Otherwise, we may have the potential, and I just want to bring this up to you guys, that we have the potential, but not necessarily the prediction or the probabilities of a lower high setting up here. And a lower high can be a very devastating signal because it tends to trap everybody. We had the same thing back over here in April of 2022. That lower high set up a pretty strong downdraft, and we did have about 18 months of a bear market back then. So we want to be on guard for this to set up as a lower high and start to work its way down. And I believe it would happen very, very quickly. Now, we don't have the same conditions. We don't have the same surprises. We've got already the surprises out of the way. So I don't see the need, or I don't see the market needing to do something like that. But again, anything can happen. We don't know what's coming down the road. But technically, I want you to be aware of that as a possibility and spend your time over the weekend to say, what would I do if the price would go higher? What would I do if the price is going to go lower? And don't just focus on one direction only. So just keep that in mind. Now, we can talk a little bit later about what I'd have to see for the price to actually start to transition back into a downtrend. Now we go over to the weekly chart. Well, before I move off the monthly chart, let me illustrate that we still have a pretty fair amount of energy left for this market to continue trending to the upside. So it can support either direction at this point. Now, as I move to the weekly chart in the middle, it cannot support a whole lot more uptrend. So if the price is going to break out here above 6,000, this is going to make it even worse. But we've had, what is this, like an 1,100 point move in just a few weeks? 1, 2, 3, 4, 5, 6 weeks, 1,100 points of movement, which is unbelievable. I don't think we've ever had anything nearly that strong before. Maybe the COVID reaction or the COVID recovery was about as strong. But from a raw numbers perspective, I've never seen 1,000 points in the span of a month. Okay, so we have weekly exhaustion. And actually, we've preemptively been in weekly exhaustion now for about 3 weeks. So what I would want to see, what I would like to see is exactly what's happening right here. The price is setting up what's called a high and tight consolidation. High and tight consolidation allows the price to recharge and allows this energy to come back up again. Range expansion goes to range contraction, goes to range expansion again. So this would be the preferred outcome from this, is that we consolidate in a range. This is why the thumbnail for today's video shows chop, maybe another month of chop. And so watch out for any attempted jailbreak and a breakout to the upside from above this level of roughly 59.50 or so, because it may get hauled back down. So any negative news is going to haul that thing back down into the pattern. Once again, just like what we had, we thought we were free and clear from the tariffs there for a couple of weeks, and then no, we went after the EU a couple of weeks ago. So this is just what's going to happen. This is just the cycle that we're in right now. Okay, so my preferred view for this is to see the S&P consolidate for another 2 to 3 weeks or so. That would be great. That would get us into the third quarter. That would get us into July. Then we can focus on earnings in July. This would also get us past the next Fed cycle, which we know is not going to do anything. The Fed's coming out in a couple of weeks, just a little over 2 weeks from today. And we all know that they're not going to do anything. And I think they're still going to be stubbornly hawkish about inflation. That has just been the narrative. Now, the other rumor that I have heard is that Powell's going to put in his resignation. And I don't know if that's at the end of this term or whatever, but you can bet that the next person that's going to run the Fed is going to be a money printing dove, no doubt. Okay, so that's our weekly chart. And then we focus on what's happening at the daily chart, and the daily chart's got a lot of energy. Again, my analogy for this is you got a 2-year-old in the back seat of the car bouncing off the walls, just woke up from a nap and is ready to go. Doesn't care if he goes to the upside, doesn't care if he goes to the downside, just wants to move. And so sometimes when we put these things together, if we have a lack of energy at one of these parent time frames, then we may get an attempted jailbreak, which gets faded to the downside. So that would come along to play with some of these enormous gaps that we have in the market right now. Guys, let me know if there's any questions. Anything that you guys want to cover or talk about is fair game for those of you that are with us here live today. Okay, so we have a number of these downside gaps, and I'm not saying that they have to be filled. They do not have to be filled, but it would be, from a technical perspective, it would be better to, instead of seeing a breakout from a consolidation, quite honestly, they don't work that well. What really works well is when you drop like a stone first, build up all the negativity, get everybody bearish, and then what we see is all of a sudden something snaps. And this is where we get these mammoth moves like that. So an initial drop down followed by a slingshot move to the upside. So some of the examples that I've seen over the years, and I'm going to go back in the market Wayback Machine here. But some of the ones that I've seen from these are just incredible. Let's see. Here's one in particular. This was really interesting. Okay, so we had a similar situation. This is back in August of 2011. I think most of you were alive back then, but we had a double bottom undercut, and then a significant rally from there, super strong, face melting rally right off the bat. And then what happened? We went into consolidation. Now everybody at this point, and this is very similar to what we're seeing right now, everybody is bought into the long side at this point. Everybody is thinking, this is going to break out in this direction. So everybody's leaning long. What happened? It actually went in the opposite direction. The market will do what is necessary to separate the largest amount of cash from the biggest cross section of traders that it possibly can. I see this over and over and over again. Whenever the move is known, whenever it's an obvious move, as this one is here, whenever we have an obvious move, the market will find a way to find that soft spot of the market and will move in that direction. It's kind of like that relative that you know, that knows your history, that knows all your weaknesses, and is right there at every time with a needle just to stick it in there. I got one of those. So anyway, that's what I'm looking at here. Markets will typically work in a way to separate the greatest amount of capital from the largest cross-section of traders possible. So when we look at this, what do we see? We see an obvious breakout to the upside. I'm not saying that this can't break out. It certainly can break out. What I am suggesting is that any breakout to the upside from this is going to have limited potential due to what's happening on the weekly chart. Limited potential. What I would prefer to see is actually a drop in price, which would do a quicker job than a straight out triangle consolidation, which is what we're in right now. This would actually work faster to pull back, fill some gaps, and then blast off of there. Markets will climb the wall of worry. Okay. Guys, thanks for joining me here today. Let's look at the NASDAQ real quick. NASDAQ is about the same thing. We're really seeing the same kind of thing. And just for fun, what I want to do is I want to look at some of the Mag 7 and see what they're doing. We may be seeing a changing of the guard here. Apple is not keeping up. Apple is not keeping up, guys. It's in a pretty serious weekly downtrend right now. This is not good. So there's a lot of people that really want Apple to do well, and it's been doing well for the better part of 20 years now in the market, but it looks tired. It just does not look well. It's below that green line, which is the 200-day moving average. And let's look at Meta. Meta, on the other hand, is doing very, very well. What about Google? Google is also looking kind of tired. This is starting to look like a little bit of a head and shoulders pattern. So watch this 200-day moving average. If the price cannot get above and beyond that 200-day, then the head and shoulders pattern that we're seeing here, the downside target becomes this estimated move, and that move is from 150 up to 210. So this would be a move down to 90. This would be a move down to 90 if it plays out like this. Now, that is not a prediction. It's just watch that, just some structure, but it's definitely setting up a lower high right now. If it's not able to get above and beyond that 200-day moving average, be careful of Google right now. So some of these Mag 7 are looking tired. We also have Microsoft. Microsoft is looking dandy. Let's see, who else do we have? I'm sure I'm going to forget somebody here. Let's look at Tesla. Tesla is actually was on the brink of destruction here and has somehow managed to rally out of purgatory. So Tesla's looking okay right now. NVIDIA looking very good. Looking very good. No problems. Who am I missing here? I'm almost thinking that Palantir is almost to the point of joining the Mag 7. I don't know what it is in terms of market cap, but it is the favored son right now to join that. Oh, Amazon. Thank you, Mark. I knew there was something in there with an A. I forgot. Amazon is barely hanging on here. Barely hanging on. It's above the 200-day moving average. And it does look better than something like a Google, but keep in mind, we sort of have that head and shouldery looking chart to it. So these things can, when they break very, very quickly. They break very quickly. So I'm trying to think of some good analogs in the past where we had these market leaders that everybody just kept chasing and chasing and chasing, and then eventually they chased everybody down the hill. Now this has happened with a lot of chip stocks lately. So like AMD was one of my holdings for a while, and when this thing went nuts, I determined that I was going to sell half of it because I've seen this happen before. You chase after something and you're holding it and you're thinking that it's never going to go down again, and this is where all the gains come, and you've got to find a way to at least peel off part of that. And then as this transitioned, you can see that head and shoulders type look again here. As this transitioned to the downside and broke that trend line, I was like, I'm out of it. I'm out of the rest of it. So you've got to have plans for not only selling into strength, but also selling into weakness to eliminate the position. So this one is, it's shown some potential lately to break out of this, but it's got to get above this trend line. It's got to get above the 200-day moving average before I can consider looking at this again. And let's look at gold. What's going on with gold? Gold looks like it's in just a big weekly bull flag right now. It looks like a bull flag. I have started to trim down some of my gold position, and maybe that was premature. That's okay. That might have been premature. I also have silver, which I have not really. Yes, I did. I did trim down silver. And silver actually looks pretty good. This looks like a big rounded base. This looks like a big rounded base with a handle on, a cup with handle that it's breaking out of. If you guys want to see a textbook cup with handle is going to be GLD. And GLD, this one is so large and so long, you can get lost in this one. So I'm going to bring this up to a monthly chart on GLD. And this is so beautiful. Okay, so here's the top in 2011, setting up a big rounded base. And I saw this triangle, and this was the point where I got on board. So I got on board with GLD when it broke above this ascending triangle. And then it's not been the easiest thing to sell options against. But here's a nice higher low. This is all cup with handle. And then the measured move target is the yellow line here. And you can see it's gone well above that measured move target. So right now, as we got into 300, that's where I decided to sell half of my position, because this is where we get into stupid land, just stupid gains. So that is gold right now. And let's look at Bitcoin really quick here. Bitcoin, we've had kind of the same thing going on. So this is also a big cup with handle. Look at that. I mean, this is, from a chart perspective, a big charting perspective, cup with handle. So beautiful. And my target is up here at about 120 from that cup with handle. So we're looking at the depth of the base should be up here at about 120. So I'm going to start peeling off positions at 120. And then hopefully holding for something a little higher than that with a remainder of the position. But this is starting to become a rather mature bull market, and it's been very selective too. You guys will notice, I don't know if you know much about crypto, but basically there's a few different majors like Bitcoin and Ethereum and Ripple and Solana, but the rest of them are, well, many of the rest of them are just standard alts with no revenue, with only promise. Some of them are just meme coins like Pepe. with no real utility. So I think this particular bull cycle is going to be very, very different. So I think all of the assets that have no intrinsic value are going to get washed away. So stick with the majors for right now. Stick with the majors for right now if you are in crypto. Okay, any other questions? Anything else, guys? That's kind of where we sit today. So I'm thinking that there's a good chance that we maybe have another couple weeks of chop. I think any kind of a jailbreak attempt to the upside, probably going to see some piece of news perfectly timed to fade it back down into the pattern. You know, we don't make our living here predicting the future. We just sort of set up what the probabilities are. And right now, the probabilities do favor a little bit more corrective action. But pretty strong move today. Pretty strong move today. We started off with a gap down, and then we went a little further, and then we've closed that gap. So it's your classic bear trap setting up day after day. And now we're to the upper expected move of the intraday price action. All right, guys. Thanks very much for your time and attention, and we will see you next Monday, and we'll see you with Mr. Dave next time. All right, you guys have a great week. Enjoy the month of June. Adios.